Hello, good people. How are we feeling? How are we doing? Hopefully, the answer is good. We're back again with Weston Financial Institute to talk through some more information I feel like is important, especially understanding stocks. And one thing to think about is if you're looking more into like the estate planning or preparing to give a gift to somebody, you might want to give a gift of a stock, or you may want to let someone inherit your stock from you. Depending on which situation you're in, one might be better than the other, but it's important to know what these type of options they give you. So, first things first, we got to understand what cost basis mean, because in this financial industry, they like to use very fancy terms, like to be fancy just to seem like they're smarter than we really are. So, when it comes to cost basis, that's a term people use a lot, and the term does describe basically the original price you paid when it comes down to how much you spent. So, for an example, let's say you spent $100 to buy GWC stock, right? $100, a little funny looking thing of GWC, right? Well, at $100 is the price you paid. That is your cost basis. So again, your cost basis is the price you paid, because it helps really the IRS know how much they need to tax you on any capital gains or capital losses you might sustain. And when you think of capital gains, think about the money you made when you sold your stock. Cool? Cool. So again, this is important, understanding the cost basis, because that can help determine if giving a gift of a stock or letting someone inherit a stock from you, put it in your trust, put it in your will, it could provide some tax benefits, right? Because if you were to, let's say, give a gift of a stock, let's say you have a family member that's graduating, somebody might have been retiring, whatever the case may be, you give them a stock that's worth $100, right? Let's say you bought that stock 5 years ago. So you bought it 5 years ago, and it was worth $30 at the time, right? So remember, this is your cost basis, $30. So if you were to give that gift, it would appear as if the person you gave the gift to bought that stock at $30 a pop. So if they wanted to sell that stock, they sold it at $100, they bought it for $30. That's $70 profit or capital gains you have to pay tax on. But this is where letting someone inherit a stock is beneficial, because when you inherit a stock, let's say you put it in your will, put it in your trust, put it in your will and last testament saying, hey, I want my shares of GWC stock to go to my grandchildren once I pass away, right? What happens is that you get a stepped up cost basis, basically meaning when you pass away, if you were to let someone inherit your stocks, whatever the price of that stock is at, that's the cost basis that the inheritor will receive. So again, same situation, same example. There was a stock you bought, GWC stock you bought 5 years ago, that were worth $30 at the time, right? Now it's worth $100. So if you were to pass away today while the stock is worth $100, that's the cost basis for the person who inherited the stock. So if, let's say, your grandkids or someone you let inherit your stock were to sell that stock at that price, and let's just say somehow, some way, the stock price went up. Let's say the stock price is now at $120. Well, you take that $120 or the current market value and take the cost basis that we established is $100 here, not $30, meaning that if they were to sell it at $120, they'll have to pay $20 or pay tax on the $20 profit or capital gains they've made. So you see this difference there is that if you were to gift that stock, your cost basis would have made it be $30, meaning that if you were to take a gift and gift that stock instead of letting them inherit that stock, and they sold it at a current market value of $120, well, that's about $90 they will have to pay tax on in capital gains. So again, knowing terms is very beneficial to understanding this finance world because it ain't nothing but terms, and it's really like its own language in a sense. But there are pros and cons for both of them because when it comes to gifting a stock, it's not all inherently bad because you can avoid some things. You have some benefits, right? Because if you gift a appreciated stock, or let's say a stock that's growing in value, you don't have to pay capital gains tax on it if you give it away. If you were to sell it, well, then you would have to pay tax. But if the recipient were to receive it and they didn't sell, well, they wouldn't have to worry about paying any tax. You wouldn't have to worry about paying any tax. And along with that, it does lower your taxable estate. So if you were to pass away, and if you give a gift or give away assets during your lifetime, it will reduce the value of your estate, which would potentially lower your state or estate taxes that you would owe once you pass away. So it's a way to lower the tax that's getting paid later on. And on top of that, you have to keep in mind that there are certain limits to how much you give a gift to in a year. You're limited to $18,000 without triggering what they call gift taxes. And you have like a lifetime exemption, but that's deeper. We'll go into deeper later around that. But along with that, you also have some control over your assets. So think about like gifting to a trust or gifting to a child in a custodial account. You still control this asset because you gave the gift to them, and you can decide how much you give, how much they receive. Unlike your inherited stock, because you kind of have to have an idea of where those dollars are going if you're letting someone inherit it. But again, the big benefit there is that you do have that stepped up cost basis, being able to minimize any capital gains tax. But all in all, you want to talk with a financial professional when you discuss these type of things because your situation may be different from someone else's situation and different from the situation we use today. So I do encourage you to talk with a financial professional to get a professional opinion. And with that being stated, if you want a professional opinion, come on down and check us out at Weston Financial Institute. Our website's on the screen, westonfi.org. Email info@weston.org. And the phone, give us a call at 334-413-1799 if this has piqued any interest and you want to learn more, because we're here to teach more.
Recording stopped.